Hey, all you Wall Street winners out there, welcome to the Wall Street Winners newsletter for July the 18th, 2022. So, really what's going on here? I'm going to talk about this in the seasonality section, but we're supposed to be in a bull move. And as you can see, really the market's gone sideways. So, when we're supposed to be bullish, but we're only sideways, that's bearish. Because if the market doesn't respond to a normal bullish pattern, then whatever is bearish out there is overwhelming the normally bullish pattern. So it's really quite bearish. Now, so far, the seasonality has worked fantastically. It's been, every move has been called by the seasonal patterns, the midterm seasonal patterns, every one of them been beautiful. But two things. Number one, much more power to the downside than to the upside. So that's been the one exception. And we're seeing it now when we're going sideways when we should be going higher. Now, I'm going to show you what the seasonality says in a minute. But as you can see, we're just going sideways here during a seasonally bullish period. And we're supposed to be bullish until the end of August, really. I'll show you that in a minute. Over here, let's take a look at the Dow. Upper right-hand corner, look at this, selling pressure increasing a little. Obviously, on Friday was a nice up day, but still more selling pressure than buying pressure. That's not a recipe for a bull market. You can see that selling pressure has been higher than buying pressure. I mean, there's a little exception here, but it's really been since the late April, selling pressure has been stronger than buying pressure. Over here on the NASDAQ, a little bit stronger, barely making a new high. We are making slightly higher highs and higher lows. We're not doing that in the Dow. We're not doing that in the S&P. So as I've been saying now for several weeks, I think the upside action is going to be in the NASDAQ type stocks and the downside is going to be in the Dow type stocks. This is the exact reverse of what the market has been so far this year. So far that's been true, but only slightly true. Seasonality indicator, nothing for either stock market or utilities. Now here's what I'm saying. So here we are here. We should see another sharp up move to the beginning, let's call it the first week in August, over the next 2 weeks, and then sideways. And then I've been looking for the pounding down to get to the real low of this bear market. But so far, the market's supposed to be going up, little dip, going up. What did we do? We went sideways, little dip. Well, now we have to see if the market responds to the normal seasonal pressures. Right now, it looks like it's going to go sideways, not up, which means when we get to the bearish pressure, it's going to hammer it even more. And that's been the pattern all year long. Asset allocation, we're drifting lower. And what that means is that people are taking money out of the stock market and putting it into the bond market. So when cash leaves the stock market, that's bearish. That's bearish. They want the safety of the bonds. And then even if they have money in the stock market, our RISKDICATOR shows that they want less and less and less and less risk. They don't want any risk in the stock market. So things are becoming more and more conservative. And this is hammering the NASDAQ type stocks so far this year. Now we're seeing some stability here, which would be supportive of the NASDAQ, the risky types of stocks. But still, the major trend is, yes, we might have to hold, we're going to put money into bonds. And if we're going to keep it in stocks, we want it in safe stocks. So there's an obvious trend there. They don't want weird, meme stocks. They don't want anything that has risk. Global markets making new lower lows, weaker than the U.S. stock market by a long shot. The economy overseas, generally speaking, is worse than it is in the U.S. So U.S. stocks are outperforming. Yield curve collapsing. We talked about this last week. It collapsed more. You can see in the lower left-hand corner, it's basically flat except for the very beginning. But if the Fed follows through with a 1% hike, which is what they're calling for, the yield curve would be basically flat all the way across, another clear sign of a recession. Bonds growing higher. I think we're going to continue to see the bond market move higher as the market discounts a terrible recession in 2023. Now, here's the thing. As the Fed is hiking rates at the short end of the yield curve, the market is lowering interest rates at the long end of the yield curve, thus making the yield curve flat. Got it? The Fed, by raising interest rates, is causing the recession, which is causing the long end of the yield curve to have interest rates go down because, man, they're looking for a bad recession. Now, they are expecting it to happen second quarter of next year. They expect to see the Fed start to decline interest rates. Unbelievable. Okay, our bond key factors, well, you can see they're all heading south. So I'm looking for bond yields to move lower. And in spite of the lower yields, we still have a strong dollar. Now, this is really interesting. The most dominant overseas currency other than the dollar is the euro. And the euro is Christine Lagarde, who's the head of the European Central Bank. She's kind of hanging on to a loose monetary policy. She's talking tough, but doing nothing. The Bank of Japan is saying, oh, no, we like a loose. They're not even talking tough. They're talking weak. So basically, the dollar has the toughest sounding central bank, and they're acting more. They're raising interest rates more aggressively than any other major central bank. And in China, of course, they're lowering interest rates. All right, gold. Well, if the dollar's strong, you know what happens to gold. A new leg down. We broke the gigantic descending triangle formation. Technically, that would call for a $300 to $400 drop in the price of gold, okay? And I think that's what's going to happen. We're going to see gold get down to 1,300-ish, something like that. 1,400-ish. This is bad news. Now, we've got to the bottom of this channel, so we could see a little bit of a rally, but that would be a rally back up to the top of the channel. So if we saw a rally back up to the top of the channel, I'm going to get out my tom-tom drums and beat on the gold market like my tom-tom drums. You got it? Okay. Our indicators for gold, see you later. All three negativo. Got it? Negative. I mean, look at this thing. Lower lows, lower highs. It's a bear market, don't you know? Crude oil. We called this market beautifully. We called it better than anybody on the face of the planet when we got out of our energy positions. I'm now in the process of starting to go short energy. I've completely flipped from bull to bear with the big, gigantic recession coming up maybe later this year, but certainly next year, the first half of next year. The demand for energy is going to go down. And jumping Joe Biden, he's over in Saudi Arabia, just finishing up a trip over there, where he arm wrestled MBS, the head of Saudi Arabia, and won that battle. Well, or maybe he didn't. I don't know. He's going to give MBS, the Saudis, a lot of stuff, mainly guns, so they can fight Houthi rebels. And in return, the Saudis are going to pump more oil. So once again, we put WTI, West Texas Intermediate Crude Oil, into the SEA category. Bitcoin. Oh, man, this thing's driving me nuts. It's a bear market. We're making lower lows and lower highs. But notice what's happening here. We had a big stair step right here. We broke down, then we had a stair step, then we broke down. We're making another stair step. Now, back in this stair step, you can see the purple predictor was very strong, showing that the smart money was buying crypto. Then guess what? They said, oops, made a mistake, and they sold their positions heavily, which caused the next stair step. Well, they're back in, they're buying, they're saying, okay, maybe 30,000 was a bogus low for crypto, but 19,000, 17,000, 18,000, pick any number down here, somewhere around 20,000, that is the low in crypto. And you can see the purple predictor going up. That's on balance volume, and it's going higher, showing that the smart money's buying. But usually these bear markets end when the price of crypto gets to the cost of production, which is around $10,000. So I'm sitting here fundamentally saying we should drop in half, another 50% drop, but the smart money's buying. I don't like to fade the smart money, so I'm just going to sit on my hands. Hey, freebies, I can't imagine why you're not becoming a fully paid up member. It just is astounding to me, since you'd be making a ton of money right now instead of sitting around losing money. Do you want to be a winner or do you want to be a loser? Come on, freebies, get it together.
Hey everybody, Courtney Smith here, and I just wanted to kind of reveal with you one of my secrets of my success, and that is I use a website called stockbutler.com, and the reason I use it is because it saves me so much incredible time, and it was based on my forms of analysis. The Stock Butler was developed by one of my brilliant students. Of course, all my students are brilliant, you know that. And he designed it around my technique for fundamentally selecting stocks. So all you have to do is you come here, you go to rate, you go to best of the best, that's the name of the technique, and bingo, there's the list. And then, since there's only 4 stocks there, no problem. Go up to rate, go down here to advanced stock list. I usually change this to main E-table, update the list. Anything in green, I'm interested in. Now, I know that these are fundamentally powerful stocks. Now, all I have to do is go find the correct technical entry and exit point. So, Stock Butler saves me a tremendous amount of time, keeps me focused on only the best of the best stocks instead of wasting my time on other garbage. All right, everybody. We'll see you later.